This 1-3 candle pattern is what I tell my students to trade all the time. I am simply using 3 candles with order flow to frame a bias. My whole model is based around this. I have students who are withdrawing profits as we speak by using this model. So let's not waste any time and get straight into what this model is. Now, I mentioned this model is a 3 candle model, meaning we have 1 candle, the 2nd candle, and we are focused on trading the 3rd candle. So what exactly are we looking for? We are looking for a PD array to be traded into, rejected, and then we're trading the distribution. So 3 key elements. If I remove everything off my screen and we start fresh, again, we're looking for a PD array to be traded into. An old high is a PD array. This is a premium array. We run into the old high, and then I said we are looking for it to be rejected. What confirms the rejection? A closure inside the 1st candle confirms a rejection. So we trade above the premium array, which is inducing liquidity. So we tag liquidity here, and now we are looking for the 2nd step to this model, to this 1-3 candle model. The 2nd step is that we reject. We reject by trading above the high, closing inside the previous candle's range. So from that line there to this line here, that is the range of the previous candle. As long as we close inside these parameters here, the 3rd candle should expand. And look at what the 3rd candle does. The 3rd candle doesn't just trade to anywhere. The 3rd candle trades to a logical level of liquidity. This low down here. Why this low down here as a target? Well, we from the high to the low, and then we had an impulse swing that ran out the premium array. Remember, this can be an FVG in order flow, in line with bearish order flow, or this can be an order block above here. But because this is an old high and we want to go lower, the low that drove us above the old high is the one that we aim for, okay? And then I'm going to teach you, we take a dealing range here. So what you are looking at now is the potential target we are taking from where we are in price right now. So when we reject the high and close inside, we take that high there to where we think it is going to go. I think it's going to go down here. Why? Because this is the low that ran out this high. So there's always logic behind what I'm picking. I'm not picking random levels. You then take your Fibonacci or whatever and measure half of this range. Above half of this range is a premium. So you can see if we drop down time frame to the hourly, you can see that we have a prediction of where price is going to go down here. This is our sell side liquidity target, okay? And then we have our premium and discount ranges. So if I draw this range again, you can see where we expect price to go to where we reject the high. So this is your fractal dealing range. This is what no one teaches you about dealing ranges. Remember, this is all based off this 3 candle pattern. Premium, discount. Okay, we want to be shorting inside of a premium. So what are we looking for? Fair value gaps and order blocks. Very simple, right? Just a quick one, guys. I know the US elections are around the corner at the time of this recording, so there's a lot of volatility in the market. If you do want to trade, I recommend Prime XBT. Please click the link below and sign up using that link, and I will be giving away things like vouchers and different codes for you to get some funds on Prime XBT to trade with. I have partnered with these guys because they are reliable. I don't just partner with anyone and shove anyone in your face, but these guys are known as a reliable exchange, and I have had the pleasure to work with them. So please do sign up with that link in the description below if you want to start trading today. There's a lot of volatility around these times in the NASDAQ, on the E-mini S&P, and you can actually use large leverage on their platform to be able to take advantage of that volatility. Lots of exchanges and lots of prop firms don't actually let you leverage the amount you want to leverage, but Prime XBT don't really have many restrictions on that. And like I said, those of you who do sign up using that link below will all be entered into some giveaways in the future. Going to give away $100 vouchers, for example, and different trading funds, allowing you to trade for free on their platform. So if you do want to support me, please do check out their platform with the link below, sign up, and you'll be entered into that giveaway. Head over to their social medias, linked in the description as well. And yeah, thank you as always for supporting me and what I do and allowing me to partner with great exchanges like this. With that being said, I will get straight back to the video. Thank you guys. So you are looking for expansion now at key times. 7 a.m. we open up, trade into a fair value gap, and then reject. We then have an up close candle and it holds for more selling pressure. We then have another up close candle and it holds for more selling. Inverse fair value gaps should be used for new selling as well. So notice how we wick below, trade into the order block which lies above it. We are collecting new orders in here. And then we run down below, equal lows. You would partial here, drop once more, OTE from high to low, run up into about that golden level, and then drop for the sell side liquidity and our ultimate target down there. But all of this framework is irrelevant if you don't have the candle formation here, where we trade into a logical level. We want to see downside form. We then reject, remember, trade above, reject, and now we can predict that a swing formation is in play. A swing high formation is in play. A swing high is obviously a candle with one high to the left of it, a lower high, and a lower high to the right of it. Okay, you are predicting that we are going to have a swing high here, all because we traded into a premium level, rejected from it, and now we can predict that third candle is becoming a swing high. Okay, this happens on multiple time frames. So if you want to fractalize this idea, you can do this on a 4-hour time frame. You can do this on a weekly time frame, a monthly time frame. I'm giving you the keys here to make money in these markets. I swear this is the easiest model you will find. I mean, take a look down here, for example. We're working within this order block. All of this is working within an order block. We are accumulating down here. This is the model that got me originally funded. This is the model that I teach to my students in the private Discord to be the best model out there, because it is so simple in its approach. Logical key level, remember, swing low to swing high. If you measure that range, we've come into a discount of this low to this high. Order block here, we trade down into the order block, consolidate for a bit, accumulating orders, and then once we trade below and reject a candle, as we do so here, you can see, remember, we are trading from a key level in a discount. We then sweep the previous day low and close inside of the range or above the range in this case. Okay, as long as we trade, as long as we reject efficiently. So it doesn't matter if you close above this candle's range. It only matters that we close at least inside it. The next candle expands, right? And then we eventually take out where? The swing high over here. We are literally swinging the market back and forth. This is what this model is. Remember, I told you, take the low of the fractal range to where we think it's going to go. We think it's going to go here because, again, this is the swing that sent us into the order block down here. This is the swing that sent us into a discount originally. So this swing here will become your market maker buy model. So let's again drop to the hourly chart, and if you take a look, any fair value gap should hold now. As soon as this 3 candle model forms down here, remember it formed down here, this is all accumulation of positions. We wait till the model forms. We need to sweep a low, reject the low, and now we are looking for buyers. Look what happens now. Remember, inverse fair value gap, traded through, reaccumulate inside the gap, then we pump higher. Let's say you missed that because we didn't tap this fair value gap. That's fine. Go into the next fair value gap. Look what happens here. Okay, this fair value gap holds for more buying. So you could be positioned inside here on this candle there, stop loss below the order block here, and say about mean threshold, aim for the original target, because remember, you take a fractal premium and discount. Okay, notice how, if I inverse this, notice how this tap into the fair value gap here. This tap into the fair value gap, notice how it came into a discount of the fractal range. So we have where we expect price to reach for, to the swing that traded into a key level. Go back a few minutes and you will see exactly the key levels. Notice how this fractal dealing range, when we reaccumulate longs for a new position, for a new buy position, notice how it taps into a discount of the range. Remember, anything below 50% here is a discount. So a discounted market, if we are looking to buy, we are obviously looking to get the best price. Because remember, we are buying something. When we are long inside here, we are technically buying something. So what is the best case scenario for us to buy? Obviously discounted. We want a discounted price. Look what happens here. The algorithm knows this. The algorithm spikes down below 50% and then rallies higher. Look at the momentum in this move here until we take out the high. Okay, because this was the last chance to reaccumulate inside of a discounted price. Do you see how all of this ties together now? And remember, guys, this can be fractalized. So look at this. And this is going to dive a bit deeper now. It's the same thing, but again, fractalization of concepts can get a bit complicated, especially if you're new. So try to follow along. But notice how we trade into, remember, a key level being this fair value gap in a discount, because it's in a fractal discount. Notice how this candle rejects and closes inside this candle. So we have a candle that traded into a key level in a discount, rejected, closed inside the previous candle's range. Look at what the next two candles do. So you could fractalize this bit of price action here and drop down onto, say, a 5-minute chart and trade this expansion. This is a fractal market maker buy model inside of that large market maker buy model. We do the same thing here. We trade back into the fair value gap. This candle rejects and closes inside the previous candle. The following candles run up, retrace, and then pump higher through where? The high that traded back down into a key level. Do you see how this is why I say it's the easiest 3-candle model you need? Multiple of my students literally do this every day, every week. They wait for the correct framework, they look for the rejection, and then they trade the expansion every week, and they pull out actual real money from these markets, from these prop firms. I'd say I have about a good amount of students who literally only trade this, and that's all they're looking for. They go into the week knowing what their next trade will look like, and that distinguishes them from profitable to not profitable. So remember, we took the high that traded back down into a key level where you're expecting price to reach for now. You take this fractal range. Notice how when we retrace into, again, a discount of this low to this high. Notice how it's in a discount when we retrace into this down close candle. Again, reaccumulating at a discounted price, because if we want to be long, we want to be buying at a discount. That's the key here, guys. Okay, understanding the cogs of the algorithm, the cogs behind this market. To understand them, you don't need to fully understand them, okay? But the easiest way to eventually come to understand them is this model here. Trade into a key level. Once more, we'll go over it. Trade above the high, reject, closing inside the previous candle. And then third candle, look at the expansion here, okay? That is a big move. And that is all you need. You need one of these a week, and you can make all the money you could ever dream of. Part of me wishes I didn't even give this away for free, but here I am. Nevertheless, there is more on this inside of my private Discord, my mentorship. If you want to become my student today, click the top link in my description. It will take you over to the page where you can sign up. If you want to become my student, please do check it out. We are closing for new signups in the middle of November. So if you want to become a student and learn from me more, learn deeper and trade with me every week and every day, click the top link in the description. With that being said, if you enjoyed the video itself, please do drop a like and comment with any feedback. Again, subscribe if you are new and turn on post notifications because you don't want to miss a video this winter. More and more content is coming. So I hope you guys did enjoy this video, and I'll catch you in the next one.